What's the dollar been up to? 7-month highs overall, 8-month peaks against a single currency, and its strongest levels all year against its UK, Canadian, and Australian counterparts. Welcome to the Travelex weekly outlook for the final week of September. We have seen the dollar's recent rally kick into high gear. In fact, the dollar has been getting broad safe haven flows given concerns about what's going on with Europe's debt crisis, as well as concern that the broader global economy is at growing risk of recession. So we have seen the dollar, it is up nearly 6% so far for the month of September. That does put the U.S. currency on pace for its best performance, its best monthly performance since May of last year. But the dollar's latest upswing, many market watchers think it's not without its limits. That's because any further signs of a slowing U.S. economy that can keep the Fed's door open to more monetary easing open, and the prospect, of course, of more action by the Fed, that does run the risk of putting some downward pressure on the U.S. currency. But like I said, the dollar's latest upswing, it did kick into high gear last week. That was on concerns about Europe's debt struggles. And it came at the hands of a fairly bleak assessment on the outlook for the U.S. economy by the U.S. Central Bank. Although the Fed did embark on a new plan to bolster growth, I think the fact that it said that the outlook for the U.S. economy is on precarious footing does leave it at risk of possibly moderating down the road. That is, if the Fed continues to pump more money into the economy to strengthen the pace of the recovery. But underscoring worries about global growth, we did see the Dow Industrials last week. They fell by nearly 6.5%. That was its lowest or its weakest performance in nearly 3 years. As a result, we saw a lot of currencies that take their cues from the outlook for the global economy fall rapidly. We did see the British pound fall to its lowest level in a year against the greenback. The dollar strengthened to its highest level in 11 months against its Canadian counterpart. And for the Aussie dollar, it fell to its lowest level in 9 months. So again, I think that underscores how investors are really concerned about the outlook for the global economy. What the Fed did last week, they also unveiled a new plan to boost the U.S. economy. They did come up with a so-called Operation Twist, where they plan to shift $400 billion in Treasury assets from its short-term holdings to its longer-term holdings, with the aim of getting businesses and consumers to take out big-ticket loans to help strengthen the pace of the recovery. But what Operation Twist has done so far, that has put upward pressure on U.S. Treasury yields, at least on the short end of the curve. And as a result, that did offer a boost to the U.S. currency, making dollar-based assets a little bit more appealing. But again, the aim of Operation Twist, that is to put some downward pressure on U.S. interest rates over the longer term to help fuel faster growth with the hopes of bringing down the high level of U.S. unemployment. But for the week ahead, we'll get a good cross-sectional view on the U.S. economy. We'll get reports on the housing sector, consumer spending, as well as manufacturing, and a final print of second quarter growth. In addition to the data, investors will really keep a close eye on what's going on in Europe to see whether or not if Athens is moving any closer toward securing a much-needed rescue loan payment of some 8 billion euro to help stave off a near-term default. Then, of course, investors will really be preoccupied with what's going on in Europe to see whether or not these officials can move a step forward also in strengthening their bailout, their emergency bailout fund. So if there's any progress on that front, that might help ease some recent pressure on the single currency, which is dangerously close to 8-month lows against the U.S. dollar. But that's going to do it. For the latest on the buck, feel free to check us out online.